Asset allocation is one of an investor's most important decisions. The way you structure your asset allocation will determine the performance of your portfolio, the risk, and volatility. But before I make a video breaking down how you should structure your asset allocation, let's break down the different types of asset classes that exist. Welcome back to my channel. My name is Reese, and in today's video, I'm giving a brief overview of the different types of asset classes you may choose to invest in over time to build your wealth. At a glance, there are many different asset classes that you may choose to invest in over time, and I have actually made videos surrounding some of the ones I'm going to talk about in today's video and will continue to in the future because it's quite difficult not to talk about some of the asset classes I'm going to mention in this video because I indirectly talk about them because they're finance topics and that's what I make videos on. So the top 5 major asset classes in no particular order would include shares, bonds, cash, property, and cryptocurrency. The reason why I decided to make this video today is that I myself actually discounted and kind of threw away the idea of investing in some of these asset classes as I was growing up. I listened to the uneducated opinions of people I knew without actually having an understanding of why or how it was a bad idea to invest in some of these asset classes. The age-old "I wish that I bought some Bitcoin back in 2016" comes out of every single person's mouth that has any clue what it is, but none of them actually really pulled the trigger and held on to them. Not anyone that I know in particular anyway. I myself actually created an account on a crypto exchange, deposited money, and actually purchased Bitcoin. I held it before it boomed, and I stupidly sold it while it was still worth nothing. I didn't even hold it for more than a couple of months because of the opinions of my friends and parents who had no concept of what it was at the time, even myself. But it was no detriment to me to hold a little bit of it in an account, me just not realizing that that actually was valuable and probably would have given me a completely different future if I held on to it. So it's why I'm talking about the topic today, because you shouldn't just discount things based on other people's opinions. You should do your own due diligence, own research, and understand why it's important or why these asset classes could actually bring you a lot of wealth in the long term. At the other end of this scale, I myself was someone who kind of adopted that mindset towards some of these asset classes. And when friends would come to me, I had a friend who said, "Hey, I'm thinking about buying 10 Bitcoin. It's cheap. It's only going to cost me a couple of $100. I said to him, "You're an idiot. Why would you waste your money? What a stupid idea." Boy, was I wrong. Like, he listened to me too, and I do feel bad about it. But what a crazy scenario. Like, isn't that just crazy that someone would go, "Yeah, that's his opinion. I guess it makes sense. I'm not going to do it." That's mind-boggling. So I've learned a lot since then, and now my mindset is, while I do truly believe that you should only invest in an asset if you fully are comfortable investing in that asset, you should keep an open mind and not just disregard a particular asset class just because of other people's opinions or your doubt in it. Do your research and come to a conclusion you're comfortable with. Okay, so with that out of the way, let's start with the first asset class I mentioned earlier, shares. Shares are an asset class of their own. They can be made up of domestic and international shares, which are traded on exchanges around the world. So in Australia, we have the ASX. That's our share market. We buy and sell shares. We trade shares through that. Me in Australia, that's a domestic share. If I wanted to buy international shares, I would need to buy them on international markets. Examples would be the New York Stock Exchange for the USA and the London Stock Exchange for Europe or England. I think England's still in Europe. Brexit, they left the Union. I digress. The second major asset class is bonds, which are made up of both domestic and international bonds as well. There are 3 main categories, which are government, mortgage-backed, and corporate bonds, and I will be making a video on this topic in the near future, so stay tuned for that. But for now, just understand that this is a major asset class and there are 3 categories of them. The third major asset class that I mentioned was cash, and this is where you would put your money into, for example, a bank account like a term deposit or a high interest savings account where it generates money for you, basically storing your money with those institutions. The fourth major asset class is property, which can be made up of both commercial and residential real estate and can come in all shapes and sizes. You could have empty land, you could have a standalone house, you could have a commercial building, units, apartments, townhouses, anything that's property falls into this category. And generally it's bought or purchased for 2 separate reasons. It's purchased for land value for long-term holding, or it's purchased to rent out and basically to earn money back from owning that asset. And asset class number 5 that is on my list is cryptocurrency. This is one that is not to be underestimated and one that will be very interesting to track moving forward into the future. There is currently about $1 trillion in the market, which that's not a small amount of money, but that is nothing in comparison to like the stock market, for example. And if it's going to continue to grow, which I believe it will, this is a space to be watching. Cryptocurrencies can be purchased through exchanges as well, and I have made videos about how you can buy it, so check them out on my channel if you're interested. Like I said earlier, I have made topics about these types of asset classes, so check out the playlists I have on my channel as well for anything related to any of the asset classes you're interested in learning about. There are also alternative asset classes which definitely are smaller in terms of what you would normally invest into those asset classes than the ones I've just mentioned, and I'm going to go over them briefly now. Just note that these tend to be higher risk asset classes, things that you probably wouldn't invest more than 5% of your net worth into as part of your portfolio. These assets include things like commodities such as oil, gas, and gold, which can be bought in particular through share markets, but you're investing in one direct commodity. Number 2 on this list would be private equity, which is the kind of scenario where, have you ever had a friend go, hey, give me $5,000 and I'll turn it into 2 million through this crazy business idea within a couple of years? And you go, I like the business idea, I'll invest my money and hopefully get something back out of it. That's what private equity is. It's something that is definitely high risk, but opportunities may arise as you grow older and actually come into some money that you can use for that purpose. Number 3 on my list is hedge funds, and this one is a little bit controversial. I don't know if you've seen the GameStop debacle that's been happening over the past couple of months, but definitely something that was very entertaining with the Wall Street Bets Reddit page. And oh man, what a story. I should have made a video on it. I didn't even think about that. But hedge funds in a nutshell basically use high risk strategies like shorting and leveraging to purchase and sell shares at high frequencies to make fast returns. It's again very risky, but hedge funds do well unless they're Melvin Capital, which we're not even going to talk about them, but I'm sure you've seen the whole story. It's full on, and if you haven't, look it up. Look up Melvin Capital, GME, have a look. But hedge funds is number 3 on the minor asset class list. And finally, the last of the minor asset classes that I'm going to add to this list are artwork and collectibles. And what a better example to use than Pokemon. I myself am very familiar with this collectible in particular. I made over $10,000 last year selling some of my old collection, and I still am collecting to this day because I see the value in these collectibles. They are very rare and very hard to come across really good condition cards, and I was that nerd who put them in sleeves when I was younger, and the outcome of this has been me actually being able to capitalize and sell a large portion of them for a lot of money. The point here is that collectibles potentially could return a lot of money in time, but it is a risk because who knows which collectibles will be the ones worth anything. To end this video, I just want to recap that the main asset classes were shares, bonds, cash, property, and now I would count cryptocurrency in there. Do not invest into any of them unless you are ready to face the battle of volatility, of markets going up and down in crazy amounts. And as you build your portfolio, it will continue to happen. And for the love of God, sorry for yelling, do your research. In the follow-up video to this one, I'm going to be talking about how you could potentially structure your asset allocation to have a solid portfolio. For now, I hope you enjoyed today's video. I hope that it was insightful and I hope you learned something. If you did, please consider liking and subscribing, or actually don't forget to like and subscribe. Yeah, I'm at demanding level, I think. Don't forget to like and subscribe, and I will see you in the next one. Bye for now.